Martin from Sept, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show. We would basically look at the technical charts to analyze and understand what exactly happened in the market previous week, and then try to learn something from it and plan for a better trading week ahead. Right? We look at Nifty, Banknifty. We have option strategies and stock picks and a lot. We trade with a plan. So if you have not subscribed, then please subscribe and share to your friends and colleagues, so that you don't miss out on notification. This is a weekly once video where we analyze the charts and understand what exactly the markets is telling us. Let's dive into the charts. Here we go. This is a weekly chart here of Nifty on the left side and the Bank to the right side. Weekly charts. Time frame is weekly. So you can clearly see that there is a multiple flags here. There's one big flag. The leg of that is not shown here. The second flag, one big flag breaking out to make the second flag, and another third flag is formed, and that also is now broken out. That's what you see there. The market is heading towards the previous, very close, hardly 200 points away from the all-time high. Less than that, basically. Banknifty also is attempting to break out, almost, not fully out of that zone, but that is also trying to break out of the third flag on a weekly time frames. Flags are powerful, and it has already shown that the breakout is very consistent. Retracement, up move, retracement, up move, right? So that's what we see. This is another weekly view. We can also see that the weekly charts are well within a parallel channel, trendline channel on both Nifty and the Banknifty, and Fibonacci extension shows that the market, in fact, earlier tried to break out of the 61 Fibonacci extension and then went, in fact, almost near to 78%. Now, after a retracement of nearly 4 to 6%, it is attempting to go back there. The market is not willing to further go down to the channel bottom. It is heading towards the channel top, to break out of that resistance zone. Banknifty also, it went more closer to the downside of the parallel channel and then reversed, very close to that. But remember, it has not exceeded and broken out of the Fibonacci 61% yet. It got the resistance there. So Banknifty has a lot of up move that can be expected when this breakout, whenever it happens, because it's anything above 61 Fibonacci upside or downside means it's extremely bullish or extremely bearish. So Nifty it already happened when it went as close at 20,000. Nifty is yet to happen, long way to go towards the top of the channel. This is another view. This view is the daily charts that you're seeing. You can see that there is a head and shoulder pattern. It almost got breached on both indices, clearly breached on the Bank Nifty, and now it has negated the neckline, and also it negated the shoulder of the head and shoulder in both time frames and went above. That means this bearishness is over now. Whatever has been done with it's over. That pattern is no longer valid. It has negated that. Also, you can see that it has climbed above the 20 exponential moving average, 50, 200, everything. Here also, Bank Nifty also, it has closed much above all the exponential moving average on daily time frames. And this consolidation breakout also can be seen. Consolidation breakout of the last few weeks also can be seen. Huge breakout attempted to reverse back. So that's what it says. Now also there is a lower low, lower high pattern that was emerging, clearly bearish in nature. Now that is also negated. So absolutely bullish. Let's see the candlesticks day patterns. This is a wide range bullish candle with a gap up on both time frames. Absolute bullish. The weekly time frames, Nifty on the left side, Bank on the back side. This is a daily time frames. Candlestick is very wide, but the body has slightly reduced with leaving behind wick on both sides, saying that there was huge volatility during the previous week. But it was definitely a bullish close on the daily time frames of the Friday. Same Bank Nifty also. Look at the size of Friday's move. Big wick size indicate big fight between the bulls and the bear happened, and finally it ended up fairly bullish. It is not wide range bullish, but it's wide range with long wicks saying volatility. That's what it is. So short term, medium term, absolutely bullish. This is another view. This is the Bollinger Bands on the daily time frames that you're seeing on the Nifty and the Bank. This shows that the Bollinger Bands, which was consolidating until last 2 days back, has now started the expansion on the upside. Absolute bullishness while it is walking on the bands. Clear bullishness, daily time frames. Nifty also expansion started on the upside, end of the consolidation, and absolute bullish walking on the on the bands of the Bollinger Bands. Now let's look at the support and resistance levels. The first immediate resistance upside would be at the zone of 19,867.55, the previous swing high, and then 20,000 nearby all-time high. That zone's big rounding number resistance is up there. That's what. From there, it can go anywhere. In order to find that, you just have to draw the Fibonacci extension with the swing low at 19,200, and then you can see we already seen that earlier. How that extension to project the targets can be seen from this charts. Now the immediate resistances is this 900 also can give resistance because it's a rounding number. 19,867 is the actual previous swing highs. After that, 20,000 resistance. Downside, it can find supports at 19,650, 19,600, 19,500, 19,465, 19,360, which is 50 exponential moving average, while 19,500 is 20 exponential moving average. So all supports on the downside, previous lows and supports. Then finally 19,223.65 is the swing low, where 9,200 has got a gap support also, which is much above the 100 exponential moving average. So clear supports down on the Nifty. On the Banknifty, similarly, the first resistance upside would be 45,400, 45,500, 45,655, 45,780, and then 46,400, 46,500. So the breakout is little lagging beyond from the Banknifty. There's much longer way to go, but Banknifty can move in 800,000 points a day, unlike Nifty, which hardly moves max to 200, 300 range. So it's very much possible that they're going in tandem. Downside, the supports could be found at 45,000 rounding number, 45,100, 44,950, 44,550, which is a 20 exponential moving average, and 50 exponential moving average confluence. So 45,500 could be a very good support. If that is breached, then we'll go back to the 44,151, 44,000 rounding number, where the 100 exponential moving average support is also there. So that's what the support resistance is a story about. Banknifty. Now let's study what happened to the momentum. The momentum and the trend are absolutely bullish on both daily and weekly time frames. Period. Absolute bullish. It is already climbed back in the bullish zone after a long time on both indices, both time frames. That's it. Now ADX is the trend indicator, which has climbed into bullish DMI zones and rising up with increased trend strength, on both time frames, on both indices. So trend and momentum absolutely bullish, no doubt about that. Moving on to volatility, India VIX is the volatility greed and fear indicator, which has fallen down nearly 11% after it had earlier climbed up 20%, all in a span of 8 weeks. And finally, this week alone, 4.4% down. So it's below 11, whenever it is below 11. So this is what has been happening since a long time, for several months. You can see that it has fallen down from May, and since then, since last May, till now, 2022 May, 2021, 23 May till now, all that's happening for the several months, all that is happening is volatility, that is, intraday volatility, or granular volatility, whatever you call it, at a less than 11, very low, historic low volatility. That's what we are. We are not coming out of that. So it's very dangerous. The spikes can be very huge, and the day-to-day volatility may not be that much, but intraday it's high. So that continues. That's what you're seeing. So this last 8 weeks alone, 20% up and then 10% down. That's what happened. So basically, volatility has cooled off week-to-week analysis. If you do, right? Now, open interest data. For the futures, if you analyze, you can see that short covering is in the Banknifty and long build-up is short covering was seen last week also. That's powerful. That means it's bullish. Futures OI is bullish. Now, options OI, if you analyze for September 13 Banknifty and 14 Nifty weekly expiries, you can see that the put-call ratio is bullish. 1.28 for Nifty and 1 above for the Banknifty. Look at this. You have very good support zones in the Banknifty and resistance near 20,000 in the Nifty with good supports downside. Right? Some unwinding of the calls also is happening in the case of Nifty. So the levels, if you see, it's not a wide range. 19,600 is where the highest puts are written, and 20,000 is where the highest calls are written. As of now, we still have orders for the expiry, weekly expiry we're talking about. 19,700 is the second highest put and call rating, 9,900 second call rating. Now 44,500 and 46,000, very narrow range for Bank Nifty also is where the highest put and call rating is seen. 43,000 and 45,000 is second highest put and call rating that is seen, right? So overall, absolute bullish on futures and options OI with a very narrow range for Nifty and the Bank Nifty indices, right? Making all of these levels and correlate that with the levels that you identify from the support resistance charts that we already seen, right? Moving ahead, we're going to analyze the sectors, industrial sectors, major ones. Absolute bullishness on all time frames, shorter and medium, both. Absolute bullishness with respect to the momentum, and we can take position in any of the sectors as of now. But so week wise, if you see 3% up, IT, metal 2% up, auto nearly 1% up, pharma 2.1% up, FMCG slightly flat. It's only sector it's flat, but still there is also green. Reality is 3% up. Absolute bullishness across, no doubt about that. That's what the sector analysis is saying. So, breakout seen on the IT sector, clear consolidation breakout has happened, solid wide range, bullish candles, bullish momentum. Breakout all time highs at metal. Now auto breakout from the flag that is formed. Also breakout from the flag on the pharma sector, absolute bullish momentum and trend. FMCG is still yet to break out from that. It's in a flag, moved positive, has a divergence, absolute bullish there also. Reality broken out all time high levels, absolute bullish. Across sector, bullish rally is what is happening, no doubt about that. Look at the major industrial sectors, the major stocks that contribute maximum to the index, right? HDFC, 15% of, so somewhere in that range is what the contribution of the HDFC. It was falling down, it was consolidating since long time in the bearish zones, but a solid white range bullish candle with big volumes is what you see. Momentum is reversed by taking a support near to the 40 RSI. Trend has crossed over to the bullish zones on the weekly time frames after a long time. That's what absolutely bullishness, bullish move, but weekly momentum has to climb over the 60 to turn that entirely and break out of the 17,057 zones for that to turn bullish. That's not happened, but green HDFC Bank after a long time, after several weeks, 4 or 5 weeks, lands again green candle after having hit resistance and reversed since last 2 weeks. Momentum slipped in the sideways in the medium term, that is, so it's not absolutely bullish, we cannot say that, but green close on both big giants that contribute maximum. ICICI Bank is similar to Doji, but it maintains the momentum on the bullishness, so ICICI Bank is bullish, remaining bullish. Infosys, absolute Infosys and TCS, Infosys has climbed to the bullish zones for the first time after a long time. After last year, October or something, just touched the bullish zones, but we have a gap resistance that's there. It's a consolidation zone. It may take time, but it's moving up. TCS also green close, but momentum is yet to climb in the bullish zones, falling behind the Infosys. Kotak Bank is consolidating as usual, but a green close at the support, consolidation sideways. Slipped to sideways ITC after a big rally, it's okay. So overall the bullish momentum is maintained by Infi and ICICI Bank, while all the other major contributors to the index have also made a green close, except all of them, all the major 4 or 5 the thick stocks that we analyze, right? Moving ahead, how did the institutions participate? Fyers sold for 7 consecutive weeks, which is a worry clearly, but it was balanced by the DIs, but net is again negative because DIs bought only 4,500 crores in the cash market, right? So net derivatives in the derivative section, net FI DI buying moved up basically. So institutional participation not that great from the FI side is a worry. It remains to be a worry. Right? And if that ever happens, that the FI also turns in and become buyers, then we have the mega rally that starts in from there. So that's what is required now at this stage for rally to continue in breakout. Now that we have seen all of this, our market, let's try to understand the global markets, the global commodities and currency to start with. So dollar index is spiked up, it's breaking out. You can see the dollar index down here, it's breaking out of a cup and handle. Right? It's worrisome. Dollar is rising up. This is a worry. It is momentum is climbed to the bullish zones, almost about to. It does not actually climb in, but once it climbs on, you can go shoot up to 140 kind of levels as it was and hit the new all-time high, and all this is possible. The worry point is that the USD INR currency chart, which indicates where the rupee is, it is also at the top of a wedge, right? And it has been staying there since so long, since October 2022. It is in that range. Anytime anything could happen, either move up or down. Last time when it broke out to 83.5 above levels, RBI intervention happened and it reversed. So it can stay in that range for a long time, but as long as the dollar is not further breaking out. Although there is not direct correlation between dollar index and USD INR, no, if the dollar is moving up, no, there is every chance that no, eventually the rupee also will weaken. So that's another worry point. Now, next jump into commodity. If you can see that the dollar after a long time has broken out of the parallel channel, green since last 2 weeks, big moves, and how much is about more than 1.3% of breakout. Some bullish momentum in the medium term is a worry point. But if it is staying below 100, it's manageable. If it is breaking out from here big time, then we have serious worry. Even now we have a worry with the rising crude oil price and a weak rupee. We have trouble. So this is the primary troubles that we are seeing there. So global market is where the troubles are there, and global commodities also we have trouble, and global rupee also. Global markets we see later. Now look at gold. The gold, which is an investment heaven when there is trouble in the equity markets, is not getting hype. It is hitting resistance and falling. That means gold is unable to break out. That means people may be probably thinking that equity is still hopeful. No, that's obvious when the market is rising up, but gold has been remaining the sideways. It's a cup and handle. It's unable to break out to that levels very close by, but it's neither ready to fall down. Look at the global markets, the final stock markets of the global mother market. US indices is what you're seeing. Dow Jones left side, top Nasdaq, downside here S&P 500. All of them are at resistance of a descending wedge. Red close is seen in all the indices. Momentum is maintained only in the Nasdaq, in the bullish momentum zone. So that's all flipped in the sideways and then facing with the resistance. So 0.77 down, 1.3 down on Nasdaq, 1.4 down on S&P 500, 0.77 down on Dow Jones. So Dow Jones and S&P 500 are the major indices. They are facing trouble and sideways and not trouble. So global markets are weak at resistance basically. So that's something that could impact our markets also. You have to be cautious about that. Now, 2 actionables for the next week. Now that we analyzed the markets properly, we going to what actionables, what trade picks and from the education point of view can be beneficial. One is Havels. Havels is an electric competitor to V-Guard, electrical appliances and all that. Is what matters. The big volume spike was seen previous weeks. Now also it's above moving average, good volume. Good RiskReward can be possible. It's a flat pattern if you see on a weekly, which is absolutely given a clear indication breakout with volumes. Momentum and trend is bullish in the medium term, and it can be RiskReward can be good. It can go up to 1649 kind of levels. Now Federal Bank has a cup and handle and breakout that has already happened, and the projection says that it can go to 150, 175 kind of zones. Can be very good RiskReward. Volumes are above moving average. Bullish momentum, rising trend on the medium term. Absolute breakout is what is happening. So right time to enter. It's already given a confirmation breakout from the cup and handle. So that's another pick. 2 picks: Havels, India, Fed banks. Both are not medium cap or small cap, I believe, not large cap. So good picks. Now this is the weekly option strategy. That's another pick. So this is nothing but a Batman, kind of a Batman. The only difference is that on the call side it's absolutely capped. That means there is no loss if the market breaks out. There can be loss if the market falls suddenly, but it's limited risk-defined loss as long as you are exiting one day on Wednesday before the Thursday expiry. Good probability of profit, 86.5. Good range we are getting. As long as market maintains in 19,543. Remember now it is in 9,800. It should be fine. 9,500 is a very good support zone. It should be fine. Just to one complete RiskReward Batman strategy. I have gone for the Batman instead of. You could also go for the double diagonal color spread that I say. So basically, Batman is having a fixed profit in the middle range, and high profit if the market is on a selling points. That would be the market moves towards the 20,050, and the market moves towards 19,600. That you have peak profits there. In between, as long as it oscillates, you have a less profit. The position size is well as per your capital and risk management, and no, the margins are less. No, break-evens have good range, and RiskReward is okay as long as you exit early and not wait for the expiry day. And probability of profit is excellent. Right? That's the Batman's weekly strategy. Options Nifty. Let's just wrap up, and now that you understood all things. So further movement upside, the continuation of the bounce after retracement of several weeks, 4 or 5 weeks on the indices. Retracement that is extended to 4 to 7% after breakout of 20% and 90%, 20% on the indices. Cup and handle flag patterns and all that we have seen. This is what has happened. And the bullish candle patterns, negation of lower low higher lower high price actions, all this we discussed. Second, this head and shoulder pattern negation, right? CAP bounce continuation, rising momentum, rising trend, more than having the bullish zones, time frames on all bullish zones on all time frames and all indices. And OI short covering and bullish put call ratio. Call ratio is above 1. Bullish bands, bullish expansion upside, walking on the bands. All this give clear hope for the bulls that the correction may be over and the rally is continuing to retrace all time once again. But the trouble is Fyers. They are selling off. US markets red. Crude is rising up. Rupee is weakening. These are the troubles that could cause troubles. And especially at near to 20k, a lot of profit booking can come in, resistance could come in, and we will have trouble there also. But looking at the charts, the momentum, the trend, all this, view for the next week is moderate bullish view. Now, global cues can change. Inflation, interest rate, war, and all these things can come in and then take all this for a toss in a black swan. So you have to be cautious always. Now the range is 19,000, 20,000, 2,000. Oh, there's a mistake here. It's not 19,000. It is 19,500. Right? 19,500, 20,200 is what I should look forward for the Nifty. And 44,000 to 46,500 for the Banknifty, the levels for the range for the coming week. Now, as long as this 19,500 and 44,000 is maintained, bulls can hope for a breakout. Eventually, that happens at about the 20k, right? Because Banknifty also can easily make 1,000 points a week. Right? So, but at the same time, you have to always be cautious. Always protect your both sides, input side and call side, if you're going for derivative strategies. Right? Have hedge positions if you're taking long. Overnight. Right? You can also use option strategies to invest also whenever, by going the opposite way and then collecting the rental income, put call ratio, put covered calls and cash up your puts and all strategies. Videos of these option strategies are separately put in the playlist. Check out that and then look at that. Now, if you're watching this and not subscribed, please subscribe and then share to your friends and colleagues. If you're already subscribed, please put in your comments like it if you like it, and then share to your friends and colleagues. Right? Want have a Telegram premium services, then check out the links that's in the description. Now, more important thing is that other channels that we have, social media channels, please subscribe to that. We post every day, not in the end of the week only. Now, YouTube has got a video only once end of the week, but all these Twitter and Facebook and all these different channels from Secret, they would have daily updates that could come with charts posted, so that you don't miss out on that. Subscribe to that right away. So that's all I have, and happy trading, happy investing, and stay safe and play safe. Bye bye.